Welcome back to Boring Currency. Sometimes reality is stranger than fiction. If you told me a week ago that the global silver market would be shaken because the US president wants to buy Greenland, I would not have believed it. But here we are. It is Sunday, January 18th, 2026, and the silver market has just changed. The media is laughing. Headlines are mocking President Trump for trying to buy Greenland again. Danish politicians are outraged. It looks like a joke. But while the media laughs, bullion banks in London and New York are panicking because hidden inside that announcement is a single policy that breaks the global silver market. President Trump has announced a 10% tariff on imports from several European nations, including the United Kingdom, starting February 1st, rising to 25% later this year. To most people, this sounds like politics. To a bullion bank risk manager, it is a nuclear bomb. The global silver market depends on one thing: the ability to move silver freely between London and New York. Banks play a game called whack-a-mole when silver demand spikes in New York. They fly metal from London. When London runs dry, they ship silver from Comex vaults back across the Atlantic. This constant flow hides shortages and suppresses price volatility. The tariff destroys that system. London is in the UK. Once silver leaves the United States for London, bringing it back triggers a 10% tax. At $90 silver, that is 9 per ounce. That wipes out profit margins completely. The math no longer works. So banks issue stop-move orders. Silver exports halt. The U.S. border becomes a one-way valve. Silver can enter the U.S., but it cannot leave without severe penalties. This traps inventory inside the United States and cuts London off from its main lifeline at the worst possible moment. London is already critically short of physical silver due to massive demand from India and China. They were counting on shipments from New York. That metal is now grounded. London faces a physical squeeze that could spiral into default. This is a black swan. No model priced it in. Algorithms cannot understand a logistics trap triggered by a geopolitical dispute over Greenland. The result is market fragmentation. Silver could trade at one price in New York and a much higher price in London, simply because the metal cannot move. The media laughs about Greenland. The banks are crying. And if you hold physical silver in the United States, you should be paying very close attention because the silver just got locked inside the walls.